Glad to be back in Vienna. It's very close to my heart. I used to live just around here in the Josefstadt. My son was born in the Goldenes Kreuz, just around the corner. So I'm quite familiar with the neighborhood. Very glad to be here in this context, addressing this very important audience to me. So before I move on to the substance matter and what we have put together in the context of the platform on sustainable finance, I just want to say that we've heard a lot. Of course, there are a lot of reservations on the state of the transition, on what are the means to achieve our goals, but do not count on me to look at the glass half empty and to deliver anything but a positive message. I want to be positive. There are lots of good things happening, and as we just heard, actually, we know what we can do and what we have to do now. And it's happening at the global level. It's happening in Europe as well. Europe is still very much at the forefront of the transition. We need to be aware of this. Last year only, clean energy investments in the world were above $2 trillion globally. And that was led by China, mostly, but also by the European Union and many other countries. If others are doing it, if investors are putting the money in clean energy and everything sustainable, there is a reason for this. And we cannot afford to miss the train once again and say we abandon our ideals and we don't believe anymore in who we are and what we want to achieve collectively as European Union, because we are very much, again, at the forefront of all this. We need to realize that and accept our own fate. We want to transform, we want to go different, we want to be more sustainable as a society. Right? So 11% increase in global clean energy investments globally, with a good chunk of it also coming from the European Union. Now, we want to know a bit more where we stand on the transition in Europe. And this was the subject of what we have put in place here, our mandate, and this was a novel activity in the context of the platform. We want to put together a framework that will allow us to keep periodical stocktake of where we stand, what are the needs, maybe where are the areas for regulatory improvements here and there, but also to realize what works, okay? The origin of what we have done is to be found in the taxonomy regulation itself. It's not the only foundation of our analysis, but it still is the main building block, the taxonomy, right? We are now only a few years into the implementation of taxonomy. We had a great introduction from Andre, and we know that we need to be cautious on the way we interpret results, clearly so. But still, there are insights one can gain from the data that has been already reported by those large companies. Right? So there are important insights that we should not ignore, that we should not downplay. And that should be actually the inception of the transition for many more companies. The overall objective, as I said, was to track progress. Hopefully we are making progress, and we are, on how capital is actually allocated and whether or not it serves those important environmental objectives, the Green Deal objectives. We've heard in the last 2 days that there are also shifting priorities, or should I say additional priorities now coming into play in Europe. We've heard about competitiveness, but no one ever said that competitiveness supersedes climate. The competitiveness compass published by the European Commission is very clear on this. There are 3 priorities. Priority number 1, decarbonization and competitiveness in that order. So it's not competitiveness above all. So it's in that order. Second comes innovation. And third comes security and defense at large. And by the way, the EIB is exactly under the same line. The President Calvino has made it very clear. We are focusing on climate change. We remain the climate bank. We support the transition in Europe, the green transition in Europe, priority number 1. And then we will indeed support more innovation. It's very much needed in certain areas. And then we will put a bit more money on defense because of the reality of the time. Okay? But all what we do here does have the green transition lens, but should also be interpreted through the lens of competitiveness as well. It's an opportunity for European firms, European economy as a whole, to transform and become more relevant, or at least keep more relevant at the global scale. Right? That should be made very clear. And again, if others in the world are doing it, we should really think twice before actually abandoning all of this. We aim at addressing three questions. Whether or not there are enough investments, and we know there aren't enough investments so far. We know there is a gap in investment. And no matter what the number is, you'll see a number of figures floating around. It doesn't matter. The exact number doesn't matter. We are spending several hundreds of billion euros every year in the EU on the transition, and we need to increase this amount by probably 50%, no matter what the exact numbers are. So if we are at 800, we need to have another 3, 4, 5, or 600. And now these are oftentimes, I don't want to mention a specific figure, and Andre, you mentioned the figures. They also come from our own report, from our own collection of data, but I also want to appreciate that this is subject to change, and this is likely to be an underestimation of the actual needs, right? But in principle, we need to realize that we do a lot, and we need to do more. And then the second question we want to address is whether non-financial corporates have access to finance to support their strategies, their decarbonization strategies, right? And third question, now looking at the financial sector itself, whether or not there is enough mainstreaming in the way financial firms go about the transition in supporting the real economy transformations. So before I move on to the results, we have a lot of data in the report that was published a couple of months ago. But conceptually, I just want to explain how things were actually brought together. We start with the overall investment needs. Again, the figure is large. We should invest above €1 trillion every year. The framework focuses on private investments because it was the mandate so far on the platform. Okay? So what you see at the bottom, I don't want to underestimate or downplay the role of public investments. We know it's very important in certain areas in particular, but it's not captured in the current framework. It may well be the subject of future framework developments. This framework provides the first transversal view of the state of play in the real economy and the financial sector. But you should think about it as an iterative process. And coming back to the question earlier on the impact, this is the thermometer, indeed. But after a few years of iterations, because we have very granular data, we'll be able to measure impact. We'll be able to say this firm is putting its money wherever its mouth is, or not. And then we'll be able to understand precisely whether some sectors that are expected to move because they have the means to move, because they have the technology at hand, whether they have really made the effort. Yes? So there are two ways we expect to see progress in the future. One, by seeing more money directed to green activities from those companies that are already on their way to transition. And second, by broadening the scope progressively of companies under regulation, those that have to report under the regulation. Okay? So we broaden the scope progressively, so we are very much aware of political sensitivities. It's a process, we need to accept this, it's all good. But after some years, we hope to see still a broadening set of companies reporting either on a mandatory basis, but also voluntarily. And there are many companies that report voluntarily, including non-EU companies. Companies from Switzerland, Norway, the UK, a few American companies, and a couple of others. They don't account for very much, but some non-EU companies that have activities in Europe understand that it's in their interest as well to declare what they're actually doing, to become more transparent. So this is to say that really Europe is a driving force in the transition globally. It was said yesterday by Sean Kidney that the European taxonomy has inspired 50 more taxonomies in the world. And again, there are lots of important concepts that are established in Europe, but then that are replicated elsewhere. Okay? So we should not abandon our leadership in this at all. So we broadened the set of companies tracked, and we expect them to report more and more on those green activities. A rather complicated slide, just to give you an overview of the framework, okay? But in a nutshell, I don't want to go into the details of all this. At the center of this, you have the real economy bit, okay? We are mostly interested in real economy transformations. We want to see what is happening, not only in the financial sector. So we do account for financial sector changes and how those companies actually tap into the different instruments at hand. We focus primarily on the primary market, just because this is the connection to actual real economy transformations. But also, we also look at secondary market because it makes sense to understand the appetite of investors in supporting the transition. And once you have put all of this information together, so we rely mostly on regulatory data, but we also put a lot of financial data into this. And we are able to tell a story. It's a high-level document that we have just produced, so don't expect something extremely detailed, but expect an overview of the landscape, right? And then we can identify those sectors that are most important for the transition. And then we can relate to the achievement of specific environmental objectives. I mentioned the strategic autonomy at the bottom of the list on the right-hand side. That relates to mitigation. It's yet another lens through which one can actually look at those transformations. So I mentioned competitiveness, but also improving our own improving our own autonomy, relying a little less on those importers of technologies and goods that could be problematic, developing new partnerships. All of this can be captured by the framework. And at the bottom of all this, there is this transition layer. So the top of the framework relates mostly to green investments, so best-in-class investments. And we know, and this is oftentimes the criticism or the reservation we see, it's very difficult for companies to report on what they do because the technical screening criteria are very strict. But there are many other operations and activities and businesses that say, okay, I want to be part of this. I would like to be accounted for because what I do may not be fully in line with the criteria, but I'm still going away from those harmful activities. And therefore, I wish my activities could be accounted in all this, right? So this is why this transition layer and framework is important. And it's now, the vocabulary is changing a little. We are referring to partial alignment. Are you coming close to me because I need to hurry up? Sorry. Okay, okay. I will hurry up. But I still need 5 minutes, please. I don't want to okay. We've had the figure, 250 billion, taxonomic-aligned CapEx, green investments. Now, we have more clarity on the destination of this money. If you put it all together, if you synthesize information, you do understand, no big surprise here, that the power sector is the driving force in all this, okay? So this is a sectoral breakdown of all of those green investments in Europe, and 40% of all this comes from the power sector, production of electricity, but also the grid part, okay? The networks are very important here. We also have a number of leading manufacturing sectors, starting with the car manufacturing sector, okay? So there are many different states among manufacturers, but some are really showing improvement, and they should be also acknowledged for their efforts. I'm going a little quick, but I'm happy to take any question or come back to you later. I mentioned the transition part, and on top of the 250 billion, we have identified another 206 billion euros of capex that can be expected as supporting the transition. They are not yet fully aligned with taxonomy criteria, but it's a significant figure. I don't want to add up those two numbers, but this is to say there are lots of companies that do a lot of interesting things, and if you put it all together, it still accounts for a very significant bucket of money, more than 200 billion, supporting the transition, paving the way, preparing the ground for greener activities in the future. So very important. The power sector, as we saw, is largely decarbonized. By default, power utilities invest in renewable technologies nowadays. So there is little capex left for transition, per se, because they have already transitioned, and they are quite green already. But in the car manufacturing, a polar case, an alternative case, there's a lot more money that is actually groundwork money, precisely to go greener. So there's a lot of manufacturers that are now investing in clean cars. And we know the sector is facing some difficulties because of international competition. But again, the Chinese car manufacturers, other car manufacturers, they're all going electric because it's the easiest way to decarbonize personal mobility. European firms are doing the same thing, and so the numbers show. Right? So this is another interesting aspect of the framework. We are able to account now for those companies that are not yet fully green, again, but that are on their way. I want to skip the left-hand side because Linda yesterday talked us through this. So basically, there are contrasted outcomes when it comes to countries and regions in Europe, and the West and the North of Europe are very much in the lead of all this. But we should not ignore what is happening in other jurisdictions. There are reasons for this. I don't have time to go through this, but it doesn't really matter at that stage. I just want to focus on the bond issuance. We don't only look at capex, but we also look at the instruments that support those investments. And it's quite apparent from the volumes of bond issuance that most of those issuances, volume-wise, are actually done also in Western countries, Western European countries, just because this is where the strategies are the most advanced for companies to decarbonize. And this is now, so I introduced what is happening in the real economy. We are now turning to the financial sector side, and if you want to, I'm happy to finish after this one. But this is an important one. There's a lot of information, a lot of data behind this simple chart, hopefully. But this is an overview of the debt landscape in Europe. And the numbers and the orders of magnitude are interesting here. On the right-hand side, you have the destination of money, and it's largely captured by households who want to finance building renovation to a large extent, and this is where the green loans, loosely defined, are coming into play. So we have a €500 billion supporting the renovation of residences in Europe. And we have a lot of non-financial corporates that also use either green loans or green bonds, for the matter, which is the instrument of choice for companies to transform. And this accounts for another €600 billion. So put it all together, households and non-financial corporates, if you add up those two things, they actually account for over €1 trillion of outstanding debt instruments in Europe. So this is another piece of evidence suggesting that the financial market is ready and is already very active in supporting those transformations. Can we do more? Should we do more? Yes. Should we integrate more risk into the analysis, price it adequately? Yes, of course. Lots of things can be improved. But there are many ways for those companies that are ready to transform to finance their transformation. Okay? And so this data shows. Okay? I will stop here. There's plenty more in the document. Please refer to it. It was as short as I could. Thank you.
Thank you.